Overall, as I said, the direction is positive. But global growth is still too low, too fragile, and too uneven. Moreover, even as it is, or as we forecast that it will be, it is not enough to create the 200 million jobs that are needed by people who are looking for a job everywhere in the world. We saw the momentum strengthen in the latter half of 2013, and we believe that it will continue to strengthen in 2014, largely due to improvement in the advanced economies. Yet, despite that, and that directionally positive movement, growth is still stuck in fairly low gear. It remains below potential, which we believe is at around 4%, which means that the world could, if it worked at full potential, could create a lot more jobs than before, than we do have at the moment. And we could do that without having to worry about the inflation genie coming out of the bottle. With inflation running way below central bank targets in most corners, clearly we are seeing rising risk of deflation, which could prove disastrous for the recovery. If inflation is the genie, then certainly deflation is the ogre. That must be fought decisively. During the years of crisis, we have relied heavily on the emerging market economies and on the low-income economies to actually be the drivers of growth. And if you combine those two categories, emerging and low-income countries, they produced actually about 3/4 of global growth. However, a growing number of those emerging market economies are slowing down as the economic cycle turns. So that's also one of the risks that we see going forward.